Good morning, everyone. Thank you for attending the Place Your Trades Network Spaces to discuss agriculture. This Spaces is brought to you by TraderVate, which has a custom web app dedicated to trading CME Group's new daily option contracts, including indices, energy, metals, and now Bitcoin. You can now trade these on the DOM on the TraderVate's main platform as well. It's a great way to get exposures to the futures market with limited risk. You can use the link in my Twitter stream to get the TraderVate app for free. I also write a weekly blog and daily pre-market overview on the markets that you can subscribe to at placeyourtrades.com. It's absolutely free. And that's what's new this week is I'll be doing a summary of the episode with my key takeaway, and that you'll be able to download that as a PDF on the Place Your Trades website tomorrow. So keep an eye out for that, and I will send a link out when it is ready. And now on with the show. First guest is Ralph Schoellhammer. Ralph is an assistant professor of international relations at Webster Vienna Private University, where he teaches economics and political science. Besides his academic work, he regularly contributes on national and international broadcasters, including Sky News Australia, The Hill TV, and writes commentary on political and economic issues in newspapers such as Wall Street Journal, Newsweek, Unheard, Spiked, and the Jerusalem Post, as well as Washington Examiner and American Spectator. He is also an analyst at my company, Hill Tower Resource Advisors. Next, we have Angie. Angie has over 18 years experience in the cash grain industry. She focuses on bridging the gap between farmers and end users, leveraging their knowledge from both sides. In 2021, she founded Consys, I hope I said that right, where she assists farmers in turning their bushels into cash. Additionally, she provides consultancy services to agribusinesses and industry professionals around the world. Angie is a renowned market analyst and has appeared on various media platforms, including Bloomberg, BBC News, Fox News, Market to Market, and Bloomberg Odd Lots. And last but not least, we have Garrett Toay. He's with agtradertalk, which is a full-service introducing broker with R.J. O'Brien. They handle commercial and farmer accounts across the Midwest, in addition to commentary and research. He's been in the commercial grain industry since 2001. He's the owner of Toy Commodity Futures Group since 2004. Garrett handles commercial accounts across the Corn Belt. He's been a contributor to Bloomberg, the Iowa Farmer Today, and Bar Charts Grain Professional newsletter. He also used to report market news for AM 640 WI out of Ames, Iowa. He's been quoted in the San Francisco Chronicle. A graduate of Iowa State University in 2000. He's presented for conferences from New York to Brazil. He relocated back to Northwest Illinois to the family farm in 2008, where he lives with his beautiful wife, their son and daughter, and a Basset Hound and Yellow Lab, apparently. So welcome, guys. Thank you for taking time out of your day today to talk with us about agriculture. I know this will give us some great insights, especially for a sector that, I'm not 100% knowable in. So first I want to start, I kind of want to start on the broad base, kind of on the macro side, and look at the policy side. So we'll kind of start with Ralph right now. And how I usually do this, I know Angie and Garrett haven't been in this spaces before. We go around, everybody gets a couple questions so that nobody's sitting there not talking. If you have a comment towards anybody else's comments, please feel free to do so. All right, so Ralph, we'll start. So let's start with EU Environmental Agency. As recently as April has stated that methane emissions from energy, and particular agriculture, have decreased 36% in the last 30 years, but they need reduction in emissions to accelerate with emphasis on agriculture to meet their 2030 and 2050 EU climate objectives. And we've seen some actions in the EU that are kind of particularly alarming for farmers, particularly in Netherlands. So let's start with that and say, you know, for those that may not know what's going on, can you kind of explain what's going on there just to kind of set the tone what's going on in Europe?
All right. Can everybody hear me?
Yes.
Yes, excellent. Well, there's a couple of things I would like to mention. Some of them are more optimistic, some of them are more pessimistic. Thank you, Tracy, so much for your introduction. And yes, one of the big stories that kind of went through the news a lot, I would say, over the last year and a little bit longer, is of course the situation in the Netherlands, where there has been a quite intense conflict between the government and Dutch farmers, mostly about nitrogen emissions, the use of artificial fertilizer, land use, and these issues. And what makes this debate particularly interesting, and I think it reflects some of the bigger problems we have in the European Union, is that it's not that Dutch farmers would not be capable of reaching the goals that both the European Union and the Dutch government would want them to, especially when it comes to certain emissions. Their main problem is the timeline. In many ways, I don't want to exaggerate, but I think it is fair to call the Dutch farmers kind of the Silicon Valley of agriculture. They are very innovative. They have some fantastic partnerships between large farming companies and large agricultural companies and universities. So they are very, very innovative. They're quite innovative in this area, but they say they cannot reach some of the goals that both the government and the EU want them to reach in the time frame that they give them. Now, what makes this debate very interesting is that originally the European argument was this has nothing to do with the climate agenda, if we want to call it that, but is mainly about the preservation of nature. But if we listen now, this conversation has shifted and it's now fully lodged in the broader debate on climate. And I think what makes this interesting is because this is the set of priorities that currently dominates the debate within the European Union framework. Climate protection, addressing climate change, whatever one thinks about it, is on the top of the agenda. And now after the energy sector, it looks like that the agricultural sector is the next one on the list. What I would add here, and I think this is something that I'm very curious to hear what the others have to say on this, there is a core problem in European policy approaches, which is that they very often try to replace innovation with regulation. And I see we see this also now in the agricultural sector. There can be no doubt about it. Modern agriculture has negative externalities, but many of these negative externalities can be dealt with through technological innovation. But in the European way, the idea is very often to address these problems via regulation. And very often, of course, regulation then leads to a shortening of supply or potential scarcities. And I think this is a very, very crucial point that I hope we can discuss in greater detail. Now, there are other examples that I find interesting, maybe two, a positive one and a negative one is Norway, for example, is, of course, not a member of the European Union. They are currently pursuing the opposite course. Like they want to get or they want to reach 50% autarky in agricultural products by the year 2050. And just as a reminder, only 3% of the area of Norway are arable land. I hope I pronounce this correctly. Arable is a for a non-native speaker a very difficult word to say. So, but the soil they can use for agricultural activity is only 3% of their territory. So they pursue a different approach. Now, Germany, on the other hand, unfortunately, and it pains me to say this, Germany always seems these days to pop up on the negative side. They plan to go 30% organic with all agriculture by the year 2030. And what this would mean is that one of the major European countries that has been self-sufficient and in many ways a grain exporter would become a grain importer. So it is no exaggeration to say that the German model apparently now is to repeat what they have done in the energy sector, to do the same thing in the agricultural sector. Now, as a last point before I hand over the microphone, one of the questionnaires on Twitter, I think, was asking about the role or the amount of natural gas used for the production of artificial fertilizer. Now, there I have some very interesting news. I hope that we can also share these or kind of discuss them in greater detail. And this again ties quite nicely in with the European situation. The generation 4 advanced designs of nuclear reactors, they already can create industrial level steam at temperatures that would actually allow the production of ammonia using the Haber process. So there actually would have been a chance if Europe would have decided to push stronger for advanced nuclear power. This could have an impact on agriculture as well, because parts of the ammonia production, of the artificial fertilizer production, then could be made independent from natural gas. So there would be innovations, or there would be directions Europe could go that would allow them to increase or maintain the agricultural output, but at the same time reduce their dependency on fossil fuels. So I believe that both the climate goals and agricultural goals could be brought in sync, right? They could be combined. But the problem is, if you forgive me if I repeat myself, again, the goal is, once again, they want to regulate the way out of I call it a perceived crisis. I'm sure that Garrett and Angie know more about this than I do, but I don't think that agriculture needs to be put under the kind of pressure it is currently put under. I'm sure that many of the listeners have heard about plans in Ireland. The idea is that they need to get rid of 65,000 cows per year. Now we have similar news coming out of France, and this is of course not going down well, neither with the agricultural sector nor with the general population. And as a truly last point, we see that that governments are very sensitive to their agricultural sector. We saw this now in the debate between Poland, Hungary, Slovakia, Romania, and Bulgaria when it comes to the import of grain and other agricultural goods from Ukraine. So the agricultural lobby in Europe is still pretty strong. One should not forget that the budget for agricultural issues is still the biggest budget post of the entire EU budget. So this is going to be an interesting conflict and an interesting development in the years to come.
Thank you. And we'll come back to you, and we'll go to Angie. So the U.S. has also set some high goals for reducing methane in farming. Can you kind of walk us through these policies and how is this affecting or will affect farmers? In other words, are we going to, see cow culling here in the United States like they're planning in Ireland?
No. I mean, I don't think it's not really my wheelhouse on that side. And it's always something to pay attention to, especially with seeing some of the shifts that we've seen in consumer sentiment and things that we're seeing with regulations regarding, raising hogs and the production practices that go into the pork that's supplied to restaurants and things of that nature in California, and we have Massachusetts. So, I mean, there's different sort of regulations that you do have coming into play that farmers and producers of agricultural products are going to have to be aware of. But I think, just kind of on the topic of, are we going to see folks forced into regulatory practices or being regulated, into production practices because of the climate or things of that nature. And it's always something that you have to remain really aware of. Like, public sentiment can shift, and you can see, especially with different levels of consolidation in the industry and things of that nature, where we could be kind of directed that way. But it feels like that's part of the reason that we have such a large vocal component to U.S. agriculture that really kind of focuses on some of the production practices that we can do just to be good stewards of the land. And so I think that's one of the biggest things for the U.S. farmer, and really farmers around the world, when it comes down to it. If we want to avoid being caught in sort of this regulatory crossfire, that's kind of started by folks that are uneducated about where their food comes from, it just goes back to the importance of providing, information, insight, education into all of the ways that, we in agriculture and throughout the industry work to be, not only good stewards of the land, but good stewards of the environment. The last thing we're going to do is destroy, the very stuff that we rely on to survive. So I don't have much, because like I said, it's not my biggest wheelhouse and what's coming down the pike. But when it comes down to it, it's always something that we're very, very aware of, and very cognizant, of and trying to kind of educate and provide additional information to the consumer about how we produce the products that we do.
Do you think that, we're seeing these big raise in carbon taxes in Canada, which will particularly affect farmers there? Do you think that we're going to see that in the U.S.?
I think we'll fight it. I mean, I think it's always a risk. But I think, really when it comes down to it, and Garrett may have far more insight than I do on something like this, but I feel like there's always a risk there. It's always something that we're very well aware of. But I think with agriculture being such a huge, important industry throughout the heart of the country and things of that nature, as long as we are able, like I said, to really kind of show and work to continue to embrace the technological advances that we have, I think we can avoid kind of running into some of this knee jerk sort of regulatory legislation that we've seen to the north.
Thank you. Then, so I'll move to Garrett now. So, same sort of question here because I'd like your thoughts as well. Are we, we followed the EU down some pretty destructive energy policies, or we're trying to. Do you think that's going to happen in agriculture, or is it different in the U.S.?
Well, what are we seeing in the European Union as far as their energy policy is basically that they create these policies that inadvertently raise their own energy prices when situations go awry, as we've seen with the Russian invasion or the reliance on Russian energy and the Russian invasion in Ukraine. And to some extent, the European Union, in my opinion, hasn't really necessarily learned from their past mistakes, and are potentially doing the same thing for their food prices because you've seen some of their reliance or lack of reliance on Asian palm oil imports because of deforestation. They're not wanting to, or they're wanting to source, or they want to ensure that their source of South American supplies are not sourced from deforested rainforest. These type of policies potentially are increasing their food costs, which is fine as long as as long as they have the money to pay them. But as we know that most wars tend to start when food prices become too high. What we've seen here in the U.S. is very similar to what the what the EU is doing, and they're very aggressive policies, especially what we've seen on the electrical vehicle front. In some of these renewable diesel and sustainable airline fuel targets, the policies, whether that is on purpose in order to, because we know the technology isn't quite there yet, or to encourage the development of these products so that they get here sooner. Case in point, 40% of the European cars by 2030 are expected to be electric. There's going to be a lot of growing pains in order to reach those goals. But here in the U.S., not only electrical vehicle or the EV proposals, but what Angie kind of alluded to with the how the consumer is dictating how they get their food. The trend that we've seen is that these policies are being put in place on the coasts and are trying to work their way into middle America. Case in point, Prop 12 with California, which recently went to the Supreme Court. It was voted on by the California people. Therefore, the Supreme Court decided, hey, this is what the people wanted. This is what we're going to stick to. But basically, it ensures that any livestock production in the state, or food produced in the state, has to be cage-free. Well, that's we can do that, but it's going to cost you more, and it's going to take a transition period within agriculture in order to get to the point where we can meet the demand of such a large state such as California. So I think that it may have started out as the policies may have started out as what I'm trying to say. They started out as in one instance and have kind of shifted to another, as you have alluded to, Tracy.
And since you brought up biofuels, that was another question that I had for you is, there's been this big government push for biofuels. And, there's two sides of the argument, like, should we actually be burning food when we're, don't need to be? So can you tell us a little bit about this biofuel push and, kind of both sides of the argument?
Well, the food for fuel debate's been around since the mid 2000s, and I think there's enough room there's enough room at the table for everyone, especially as technology advances. That these side products that are created from biofuels are allowed to create as food stocks and feedstuffs. But yes, I mean the ethanol or the biofuels industry started essentially in 2006 with the renewable fuel standard. The renewable fuel standards have been altered, changed multiple times over the last 17 years. But the latest push has been through the Inflation Reduction Act with a big uptick in tax credits for sustainable aviation fuel. There's a $1 a gallon tax credit on that. That's really spurred a lot of venture capital or a lot of venture capital interest in those markets. And the renewable diesel obviously has been an obviously big demand driver here, with expectations of 5 billion gallons of ethanol, or renewable diesel output here within the next 2 years. So a lot of government encouraged expansion that should be fairly friendly to soybean complex products, especially soybean oil. And those markets are going to have some long-term demand built under them.
Well, recently there was just a big article in, I think, the Wall Street Journal talking about sustainable aviation fuel, or sorry, it was Financial Times. And all the big airlines were saying that this is going to cost a lot of money. We're going to have to pass this on to, the consumer, and everything's going to get very expensive. So is the technology right now at the point that it's like too expensive for, to really become a commercial product at this point?
Is that to me or Angie?
It better be to you, Garrett, because I have no idea.
Right, it's in its very initial stages, and it's very early. I know that there's been a lot of deals. In fact, ADM is one that's announced a deal with a sustainable aviation production that basically, they see the shifts coming relative to declining gasoline demand with the onset of EV expansion. Airline fuel demand is massive relative to gasoline demand. So there's a big pool there. So as far as, is it sustainable at this point? No, but that's why the tax credits are there, is that it's trying to encourage the point in the technology so that it gets more efficient. How long does that take? That's the $64,000 question. I mean, long term, the ethanol industry today looks a lot different than it did in 2006. And if you look at the structure of the overall industry, how this is developing, I think, regardless of whether it's the profitability is there right now. When we started the ethanol industry in 2006, most of the ethanol plants in the United States were small, farmer-owned ethanol plants. They were locally owned. They did a fund drive. Everyone bought shares, that sort of thing. And we've had a massive amount of consolidation. Major oil companies have invested in these ethanol plants, and to the point now where the ethanol industry is on a lot firmer footing. Majority of these plants are paid for. They're expanding. They are increasing. They're improving the technology. You look at the carbon sequestration pipeline that's being proposed across the Midwest. You've got that sector now with this renewable diesel and with the sustainable aviation fuel. If you look at all these soybean crush facilities that are being put in with renewable diesel projects in them, who's their investors? They're all the oil companies. They're already vertically integrated. These renewable diesel facilities are starting out on third base with the amount of capital they have behind them. So longer term, I think it's going to be quicker for them to achieve profitability than what we've seen in the ethanol side.
Excellent, thank you. So we'll go back to Ralph, because I want to hit on Ukraine-Russian grain deal. a little bit. First,
Sorry to chime in real quick. I think I can hear everybody but Tracy for some very odd reason.
Can you hear me now? Hello? Can everybody else hear me?
I can hear you. We've run into this before. It's not fun, but space hiccups. So he might have to leave and jump back in, and he can probably hear you again.
All right, I'll do that.
All
it's
right.
such a pain. It's no fun. It's worse when the host can't hear anyone. I've been there before.
Okay, well, so we'll go while he goes out and comes back in. We'll go to Angie. There's been, let's kind of get, out of the macro policy world for a second here and talk about really what's going on the ground. We're hearing a lot of things like, or we're seeing a lot of articles say about drought and crops in the U.S. So can you kind of give us an overview of really what's going on right now as far as the crop progress is concerned?
Yeah, I mean, it's early in the year, but we've definitely experienced one of our drier periods here. Here specifically, I live in the state of Michigan, and a lot of my customers are right here, and we've had the driest stretch of weather since the start of May ever in 130 years. And so, yeah, we've never really experienced anything this when it comes to the dryness, and it is greatly concerning, when it comes to needing to have reasonably decent production and being able to do the things that we need to do in order to meet, market demand and expectations on that side of things. So it's concerning, but we are looking to see a pattern shift here pretty soon, or we hope that we see it here this weekend. And if that's the case, then it's early enough that we'll have the ability to do what we, hopefully be able to recover and go forward. And I'm sure Garrett's got tons of great insight. I saw him unmute himself, so I'd love to hear what he has to say.
Garrett, if you want to chime in, go ahead.
We're in a bit of a tricky situation. We are in a issue where we could have a potential supply issue in the United States, and we're at a point where we have still horrible demand that's being undermined by South American supplies. To the point where even with new crop October and September, November timeframes, Brazilian corn offers are still $30 a ton cheaper than the U.S. So over the course of the last 5 to 10 years, it's a dead horse, but the U.S. has become the residual supplier of the world, largely because of the ability of the U.S. farmers to store grain, whereas their competition largely it was Ukraine. Ukraine farmers did not have storage, so everything that they grew, had to be sold at harvest, and it created a cheap supply. Same situation in Brazil. Now the situation this year is going to be it's a transition year. The last 12 to 24 months, we had an inflationary drive higher. Post-COVID, we've had a lot of investment money has come in, and obviously the market has done its job as the U.S. Fed has raised interest rates, and interest rates have increased across the world. And therefore, the last 4 months, we've seen that transition away, where that hot money and investment money has left as we transition more to a more normal year, and that inflation comes down. Now, this year may not be as interesting as next year. I mean, obviously, the U.S. is going to be the residual supplier, but it's interesting to me that if you look at profitability, and this is the first time in several years, where the profitability in South America is not where it has been in recent times. In fact, they're going to lose money potentially at this point. So, with a rebound in Chinese demand potentially, and a decline in South American supplies, then maybe next year could be a little bit more interesting in the ag sector. But a weather transition here in the United States with a potential flash drought across many areas, it could definitely hasten that transition here.
Yeah, and just to kind of add on everything Garrett said about demand and what's going on in Brazil is super important. And, we have to to make the crop here. But one of the biggest things that I, am kind of continuing to watch, and I know he is too, or at least I believe he is. Well, I know he is just, the global end user feels disengaged. And maybe it's because they assume that the, prices will be cheaper later. A lot of it may have to do with the fact that we really just don't have access to the capital that we used to be able to. It's getting more expensive to access money. And we really kind of rolled from, shortly after COVID, we had this idea that we were going to go from just in case, or just in time to just in case, and we were going to stay that way. But the reality is we went from just in time to just in case, and now we can go back to just in time, because the point that Garrett made about the U.S. being the residual supplier, is really that if it comes down to it, at this point, the U.S. is just so expensive in the global market that we sit on supplies, and if we run into a production issue elsewhere, they know that they can still access it, and we have the ability to move it to them, high quality products relatively quickly if needed.
And that's what you kind of brought this up a little bit about. If you could go into that a little bit more, are, higher rates are obviously affecting the energy industry because, commodity traders, tend to borrow money to buy and store these products. So are farmers having the same issue with higher rates?
Absolutely. Yeah. I mean, not only that, but the inflationary post-COVID year drove up the cost of inputs. So this year, for the U.S. farmer, especially seeing $7 corn for 12 to 18 months, and then they're paying higher prices, and all of a sudden now we don't have $7 corn. You have to definitely be a pencil pusher this year, because there's a lot more risk on the table now. With lower energy prices, I just got quoted, $600 urea. That's down $200 a ton from, January. These fertilizer prices are starting to come down. Things are starting to correct a little bit to reflect lower commodity prices. But if you locked in your input costs and didn't do grain marking at the same time, man, you're feeling a little sick to your stomach right now, because you're probably going to take a loss on that unless you have the acres to spread those out. But one of the points that Angie made that I'd like to hit on is that yes, there's a big South American supply, and if we do have a potential issue in the U.S., it's a weather market. It's June 7th. We have a lot of growing season in front of us. But what we necessarily have to do, there's two things that have really kind of undermined this market. Well, three things. We went from a large money market long in the corn market to a money market short. That is largely on the heels of wheat. Wheat is extremely cheap. 3 weeks ago, it was basically the same cost as corn, and that's undermined corn demand. That's kind of alleviated some of this Chinese demand for corn out here, as well as demand for corn globally. If there is a true concern from the world corn short, and I'm not just talking about a money market short, but a end user short, they're going to come up and swoop up the cheapest supplies they have, and that's in South America right now. And at this point, they're not at that point. We're still $20 to $30 a ton. It's still being dictated. They're still $20 to $30 a ton cheaper than us. The end user really hasn't, panicked yet. The market itself, the market structure itself, the money market short that came off this big long, they've cleaned themselves up, and they've been able to clean themselves up fairly easily to where they're basically neutral now. And we've had a 30-cent rally or so, or 40-cent rally today after a dime lower. But the cheap wheat issue has been an underlying factor that's undermined the corn market. The cheap South American supplies, and at this point, I think the market is cautiously watching, this U.S. weather situation. But they're not concerned yet, because if they were, they'd come in and swoop up all this cheap South American corn, cover their needs, and be done from that point forward.
And I think part of the reason, just to kind of add on, because I agree with Garrett, is part of the reason that they don't seem concerned is that, kind of looking at what we would be seeing for old crop carryout on corn, which ends up being beginning stocks for new crop, and then subsequent demand reductions that would fit in, versus current USDA projections, we could lose a relatively decent amount of projected production right now and still have a reasonably adequate carryout at this point. And so that, I think that's part of the reason too, is that most folks are just kind of like, all right, well, you're going to have to do a lot more to get excited. But a 45-cent run up in a market structure that's changing also isn't the worst thing that we've seen. So yeah, it's an interesting situation to be in, and one that will give you whiplash compared to what we were looking at a year ago when we thought we were going to run out of just about everything. High prices have cured high prices in the sense that a lot of the world end users have trimmed their usage too, and they will until the prices are low enough to kind of encourage ramping up that demand.
Thank you. Ralph, can you hear me now?
Yes, I can.
Okay, great. So we'll go back to like Ukraine and Russia as far as grain is concerned right now. We know that the deal, the Russian-Ukraine deal, which that deal means that Russia allows Ukraine to export grain across the Black Sea. That's meant to be extended for 120 days at a time, but in March, they only agreed to 60 days. They did the same in May. Should markets be worried about this? What does this say about that relationship? And, what does this mean for, the rest of the world as far as exports are concerned out of Ukraine, obviously?
Well, I think it's a tricky situation, because one of the things we have learned over the last year is that while they might be weak in certain economic areas, Russia and partially also Ukraine, they are definitely, let's say, agricultural and energy, particularly Russia, energy superpowers. And these two areas, given that they are the basis for all the other areas, right? We cannot really live a good life without food and without energy. Kind of shows that their power very often seems disproportional to what their overall economic picture would reflect. Now, one of the things that I feel might become a bigger topic in years to come is agriculture in Africa. I mean, I think this is a little bit of an underreported topic, that 65% of unused agricultural land are in Africa. Many African countries are still massive food importers, but hypothetically, I just recently read a statistic that if done right, Africa could by 2050 produce enough agricultural products to feed 9 billion people. So that would pretty much be the entire planet. Now, these estimates might be a little bit exaggerated, but if I'm not mistaken, Zimbabwe had a pretty good wheat harvest recently. So there are some upticks or some signs of recovery of the African agricultural sector. But of course, at the same time, economic data from sub-Saharan Africa looks very, very bad at the moment. They really suffer from this kind of bifurcation of the international system, so that the political fallout has quite dire economic consequences in some of the poorest parts of the world. But this, of course, brings us back to the dilemma with agriculture generally. We don't just want the most efficient production and trade in agriculture. You probably also want to ensure that you don't depend on somebody else for agriculture. And this, again, is the big dilemma, without hopefully repeating myself too much, but this is the big dilemma that Europe has in many ways. So on the one hand, it wants to restrict massive modern agriculture due to the potential harm it can do to the environment and to climate. But of course, at the same time, if you don't produce yourself, you don't want prices to explode, you have to import it from somewhere. But of course, then you depend on whoever is the exporter. And if kind of one of the key players in this industry happens to be Russia and Ukraine and a few others, and they are in a direct conflict, then, of course, all of a sudden your food prices will come under significant upward pressure. I think this is something similar we see in fertilizer production. Yes, Garrett is absolutely correct, but prices have been coming down. But if we see who the major players are in fertilizer production, right? I mean, Saudi Arabia is a bigger producer than many European countries. So these dependencies, I believe, will in some countries lead to let's say a
a new approach towards agriculture, and probably a change of mind in agriculture. But I think one of the bigger issues is, for me at least, is going to be what's going to happen to agriculture in Africa, given the potential they have that they cannot fully use yet, mostly due to political and economic instability. But I think the biological conditions would all be there for them to be a major player in the economy. And of course, the other big topic, which was also mentioned, is Latin America. And the Europeans are still dragging their feet of agreeing to a free trade agreement or a partial free trade agreement with Latin American countries, to a large extent because of the European agricultural sector. By the way, the same was true during negotiations about trade agreements with the United States. The Europeans are very, very protective, on the one hand, of the agricultural sector, trying to avoid imports, but at the same time, they put a lot of pressure on the agricultural sector to more or less cut their production. So this, I think, is going to be a gap that's going to be very, very difficult to bridge. I think this was all from my, for now, this was all from my side.
I'm like, did I lose touch? But maybe I'm.
No, I showed Tracy muted. I don't know if she means on purpose.
Oh, hello.
There
Did I not unmute myself?
No, there you go.
Oh my God. All right. So that was kind of my next question, was how do European agriculture policies kind of hinder farmers' access to agricultural inputs such as fertilizers, machinery, et cetera, at affordable prices? That was Pharrell.
Yeah. I think that's really the problem that Curtis, and we saw this. It has recovered now a little bit, but the velocity and the speed with which fertilizer producers were suspending production in 2022 during the energy crisis was astounding. And I know this, we talked about this in so many spaces, and we hear it on so many podcasts and so many articles, but it has to be repeated. Even in the agricultural sector, I would argue that the mild winter Europe had was a stroke of luck, because that freed then the natural gas for other areas of the industry. But on the long run, it's not for anybody in this space, and not for anybody of the speakers, of course, but I think it's still massively underestimated the amount of energy that is necessary for agricultural and livestock production. I mean, what we saw were, for example, pig prices, or the price of pig meat in Germany, because massive pig farmers, they were under massive price pressures again during the energy crisis. So these two major sectors are intertwined. And of course, a last point to this, when we talk about whether we want or not, or whether we think it's over-dramatized or not, but of course we see this also with the problem of deindustrialization in Europe. It's only a matter of time until this will also affect the agricultural sector and the major producers of agricultural machinery.
So well, right, exactly. That was kind of my thought as well. So Europe's going to be cold and hungry? Is that what we're saying?
No, no, I don't think. And this is the. Let me give you one quick example. Right, we currently, there is this huge debate in Germany, because the so-called Alternative for Germany, which is kind of their far right party, is really surging in the polls. They're currently, they pretty much have overtaken all the three parties that are currently in the coalition government, and they're only second to the Conservative Party, who is the main opposition party. And it's kind of funny to read a kind of German commentary. Everybody is scratching their heads and saying, how is it possible? Why is it possible that they have such a kind of stellar rise in the polls? But it's very simple, because of course people feel that they are getting poorer, because of course they can still afford food, right? They also can still afford energy, but it comes at significantly higher prices, which means they have less money for other things that they would like to buy. So I think there is, and we saw it also in the Netherlands, basically from one seat to a majority, the BBB, the Farmer Citizens Movement, as it's called in the Netherlands, is now one of the major political powers, right? And they existed, but they had like one seat in the national parliament, and they are very likely to become a major power in the next national elections. So this is leaving traces in the political sphere. Italy, the same thing, right? The Italian government is now making massive steps to protect the Italian agricultural sector. Now they say they do it, which is I think also true, right? Those two things can be true at once. It's not just for economic reasons, but they say it's also for quality reasons. And I think we're going to see similar developments in France. So I don't think that anybody's going to go hungry in Europe, but it will be very similar with the energy sector, right? We're just going to buy up what others then potentially can no longer afford. So this is also going to put pressure potentially on other countries. But the agricultural sector, as again Garrett and Angie have wonderfully said and alluded to, is a very tricky one, because one wants, in addition to economic gain, one also wants a certain security of supply, and one therefore wants to protect domestic agricultural sectors. And we saw this just recently and I mentioned this before, in the conflict between Ukraine and Poland. And just kind of to add some context to this, like Poland is probably, at least from attitude wise, the most forceful supporter of Ukraine, right? They've been as much as they can from their economic side, but they really have been on Ukraine's side from day one, both verbally, militarily, economically, in basically every aspect, with one exception. And that's the agricultural sector. So I think that shows that this really is an area that takes a very special place, and that's why I think it's important to always keep an eye on it.
Thank you. Now we'll go back to Angie and Garrett. We'll talk about the U.S. a little bit. Can we talk about, like, I don't know, maybe some of the new technologies that are coming out that maybe we should keep an eye on, especially if people kind of want to invest in the agriculture sector?
Can I circle back to the Ukraine grain deal? Is that okay? I don't mean to.
Yep. Go.
I just want to point out this Ukraine grain export corridor deal is it's a red herring. I mean, we have these headlines every 30, 60, 90 days, whether they're going to renew or not renew. The market has essentially become immune to these headlines. The majority of the grain in Ukraine is out of the country. It's been able to cross the border via rail. It's been able to cross the border via truck, to the point where, if you step back and you look at this, it's the export of Ukraine grain to other EU countries has essentially potentially lost some favor to other EU countries, because all these other EU countries are trying to ban Ukraine imports, or they're trying to, because it's hurting their own farmers. Now, if you have your T-square here and you're chalking up a win to Putin versus chalking up a win for Ukraine, this is one way that Putin may be trying to turn the EU against Ukraine is all this grain that's moving across the border. But as far as the grain export corridor deal, it doesn't matter. If you take the 64,000 foot view, the biggest problem with this Ukraine-Russian war is the longer that it goes on, the more cropland that gets destroyed, the more infrastructure that gets destroyed. It's going to take a lot longer for that to get rebuilt. And if you look at these production estimates since the Russian invasion, Ukraine's grain production is getting smaller and smaller and smaller, and it's declining. In the mid 2000s or the mid 2010s, the majority of growth in agriculture output, and especially feed grains outside of Brazil, has been Ukraine. So that's a change in trend. Now you look around and you realize, hey, these BRIC countries are still working together a lot. Whether that's a relationship, Brazil, Russia, India, China, Brazil, Russia, and China are all working together. And maybe this is a dividing line that you see versus the West versus these BRIC countries. But it's going to be an interesting situation to see how this plays out, because China who was a major importer of Ukraine grain until the invasion, his for lack of a better term, potentially has shown favoritism to Russia. They have shown their willingness to invest in infrastructure in Brazil as a future, supplier to them. But if there's an actual winner or loser of this invasion or how this plays out, will China eventually be willing to, say, well, even though, if Russia loses, will they come in and be willing to rebuild Ukraine infrastructure so that they can ensure their food supplies? It's going to be an interesting, situation to see how this really plays out longer term. But we have I've noticed we have definitive divided lines of sides being taken that have longer term impacts to world ag production.
So say, I kind of want to get into the investor side because there's a lot of investors I know listening to this and say they want to invest in kind of this sector. What are kind of some of the opportunities in this sector for businesses, such as new technologies we should be watching, or new things coming down the pipeline that are interesting?
The most interesting thing to me is the improvement in automation. A lot of you have autonomous tractors coming down the line. We have drone chemical application. Everything that is probably the future of agriculture, especially as we see more vertical integration and more, what the average age of a farmer is still 60 to 65 years old. But it also, and you're seeing more corporate investment in it as well, where these farms keep getting bigger and bigger. I think technology is the future of things. There's an article out today, Reuters, talking about, how their one firm, Benson Hill down in St. Louis, has a accelerating growth warehouse where they're working on seed varieties that are maximize oil output for renewable diesel demand, while also maximizing meal output for protein demand to utilize future soybean varieties. To this point, those type of technology advancements were largely in the hands of Monsanto, who is now owned by Bayer and other other companies like that. I think those are probably the areas that you want to focus at.
Angie, did you have it?
Yeah, I mean, I would agree with Garrett on that entirely. I think one of the biggest things that we're seeing that I'm, really most excited about or most intrigued with when it comes to advancements is anything that just kind of creates the ability to extend the products that we're able to get, or the byproducts that we get from, the process of crushing, grinding, whatever, ethanol, improving the amount of ethanol production that we can get per bushel of corn, being able to get more oil and higher quality products out of the soybeans that we're crushing, all of those things. Better seed technology, I think, is huge. I mean, we have a huge conversation, or we have a good debate ongoing right now with the drier start to the year, on what that could mean from a yield standpoint overall. But there was someone that tweeted late last week, 30 years ago, a dry start like this, we may not have even been able to be, where we're sitting right now, when it comes to production potentials. So when it comes to investments and things to watch, the automation's huge, simply because finding employees in agriculture is difficult. There's a lot of long hours. It's less than ideal environments in a lot of times, in a lot of situations. And so automation is also huge. So doing more with less is kind of the core to both of those. And then one other point, just to piggyback on the Ukraine conversation, it is interesting to note, Garrett had mentioned about China exporting a lot of grain out of Ukraine. China has been the biggest benefactor of the Black Sea Grain Initiative out of all of the countries in the world. They've taken just over right around 5.3 million metric tons of corn and just over 7.2 million metric tons of total product. So they were definitely in making sure that they were grabbing what they had owed to them, and additional sales when things got cheaper. They were right there in the forefront, and that's part of the reason I think you may see it stay, or there may be support to keep it open. But you've also seen the amount of grain moving through there dwindle pretty significantly here over the last few weeks.
Yeah, China loves cheap commodities. That's a fact.
One more point, and I'm going to anger every farmer that's listening to this spaces right now. But if you want to invest, you benefit yourself from the potential in agriculture, and that's buying farmland. It's not easy to say when you've got 8% interest rates, but if you want a piece of the action, that would be where it's at, especially in the face of if we have a potential cash crunch here coming from the farmer. Owning farm ground is probably going to be the best investment.
Is it hard to keep up with all these big commercial farms? Like gobbling up other farms. I mean, is it viable for smaller farmers?
No, the barrier to entry is relatively difficult, but it's all cyclical. I mean, some of these larger corporate farms. I mean, where I'm at in Northwest Illinois, I'm fortunate enough where we don't really have a lot of corporate farms, or what is a corporate farm per se? Was it 30,000 acres, 40,000 acres? But where I'm at in Northwest Illinois, I can probably name 10 to 15, 8 to 10,000 acre farmers. I mean, we're a very progressive area of Northwest Illinois that have good crop ground. But that's cyclical. I mean, it makes it difficult for a person like myself. I bought my first farm in 2012. I bought my second farm in 2015. I bought my third farm in 2017. It makes it difficult for somebody like myself to enter the game, and it makes it even more difficult once you own some farm ground to find rentable ground. You got to, the barrier to entry for a new farmer is very difficult. But from an investment standpoint, you have to find a relationship with, maybe you find a relationship with a large producer that's willing to pay the cash rents that you need to get that return on that ground. Besides the fact of the appreciation, I'll be perfectly honest. I'll tell you, I bought my first farm in 2012 for $5,100 an acre. Okay, and that was only because it no saled at auction. I went to the seller, and I offered him $200 an acre more than what it no saled at. And a farm 2 miles north of my farm, where I farm, and it's not as good as farm as my farm, sold this winter for $10,000 an acre. That was 11 years ago that I bought my farm. It's doubled its price in 11 years. That is probably not sustainable, especially with interest rates at the highest level since early 2000s. But longer term, I think that I sat in Econ 101 with Jeremiah Hayes at Iowa State University in 1996 on the first day of school. He said, buy land, it's got a vertical supply curve, they're not making it anymore. And it's been over 26 years, I remembered that, and I should print it on a plaque and put it on my wall because I've abided by it my entire life.
Nice. I like it. Well, we're coming up on the hour, so usually what I do for the last round is everybody can give their final thoughts, or talk about something that we haven't been able to discuss but you wanted to mention before we go. And so we'll start with Ralph, your final thoughts, or something that we haven't talked about that you want to talk about.
Well, just one final thought. It's something that always kind of bothered me, and I think this is a great opportunity for me to mention it. And just as an example, but I think this is a broader problem. The World Bank published a report in 2008 where they pretty much recommended to the developing world to put as much as they can in organic farming and small farms, and this idea of not doing the way that Europe does it, other countries do it, like modern mass agricultural, technologically advanced agricultural policies and agricultural approaches. And I think this is still a problem we have today. There is an inherent hostility in many, not all, but in many Western institutions towards modern agriculture, without realizing that, of course, if you have modern agriculture, you can have higher outputs on small areas, and thereby you can at the same time ensure feeding people, but still probably keep negative economic impacts at a lower level. I mean, Angie said this perfectly before, especially those who work in agriculture and the agribusiness, they know that the land and the environment is what they need for their business, so they have no interest in destroying it. But there seems to be a hostility towards modernizing agriculture in Latin America, towards modernizing agriculture in Africa, for ideological reasons. And this is something we discussed this in different spaces and different settings as well. But I really want to emphasize this again. I think that the strength of ideological barriers to implement technological solutions, whether it's in agriculture, whether it's in energy, whether it's in other business and economic areas, I think these barriers are much more influential and stronger than we generally recognize. I think there's still the idea that ultimately rationality and a kind of pragmatic approach will be successful. And I believe this myself until I engaged more with these areas, and there's still much I have to learn. But I feel that we tend to underestimate very often these ideological barriers that are created, I would argue, by bureaucracies and individuals that probably don't really understand the industry that they want to regulate. So this is very important for me, or was very important for me to mention.
Thank you. And Angie?
Yeah, I mean, I agree with that 100%. I put out last year at one point something about, when we were seeing governments make really rash export bans and doing different things that were only exacerbating the run up in grain prices and it just kind of making the world supply and demand outlook an even greater mess than what it had been made after the invasion. And so I argue 100%, like, those of you that are in bureaucracies or anyone that's possibly listening that has connections with anyone that's trying to regulate or make decisions about an industry that they have limited information on, there are a ton of experts at a moment's notice. I guess it's hard to sort through who is the good and who is the bad. But yeah, I think that's one of the biggest dangers is that we just kind of sit here quietly thinking that everyone knows that we're trying to do good. I say we as those of us that are in agriculture. And so I think that's an important thing is just kind of to continue to emphasize how important it is that we are good stewards of the land and the livestock that we take care of, and how that's the core component to most anyone's belief that's in agriculture. On my point in particular, I really don't have much to add. It's been a great conversation. I mean, the biggest thing that I'm watching is obviously just how the crop develops as we move forward. But really, until just to kind of continue to beat this dead horse, until we see the world end user getting further engaged than what they are, and until we feel more confident that we're not going to kind of see ourselves roll into a pretty deep sort of global recession, things are going to be a bit tenuous, and the market's probably going to likely remain under pressure without some sort of major production issue. And so that's the thing that I'm watching. Garrett had mentioned that the speculators had moved relatively. They'd taken what had been a significant long position, pared it down. We went a little bit short. We're kind of back to neutral now. And so there's this idea that we need to see these speculators come back into this market structure. And the reality is we don't necessarily need to in grains at this point, simply because there isn't a hot story that can help you guarantee the kind of return that we had been seeing in the years prior, or the kind of return that you can get in other investments, putting your money elsewhere. And so that's the one thing that I kind of caution for just about anyone, especially the farmers that are listening, is, we are in a pretty significant transitional sort of phase. And we've got to make a crop. We've got to see the pattern shift, as the meteorologists are saying that it may, into next week here across the Corn Belt and beyond, well into August, to feel confident. But, at this point, if we take into consideration, even normal weather going forward, there's not really a catalyst there outside of an end user getting spooked. So that's the biggest thing I'm watching. It'll be interesting to see. We've never really seen a crop the size of Brazil's soybean and corn crop come off back to back like we've seen. And so there'll be some things in the cash trade that happen coming out of there that'll probably be something we've never seen before. And so that'll also be really interesting. And I'm a nerd, but super fun to watch.
Can you explain what Brazil a little bit? a little bit more in detail for people that don't know what
Okay,
what's
so
going
yeah,
on?
so we've and Garrett will be able to add far greater data detail than I because he is my data guy. So I feel I'm not going to use his numbers to quote when he can say them out of his own mouth. But the reality is in Brazil is we've seen a record crop. We saw a record soybean crop come off. We saw a soybean crop that was 30 million metric tons larger than the crop produced a year ago. That's over 1 billion bushels. It's a pretty significant increase. And as a result, it was difficult to I liken it to trying to shove a watermelon through a garden hose, right? You have a ton of physical supply available and only so much space to move it into or space to move it out with. And so it gets uncomfortable. And in the cash market's job is to balance supply. And so if you have an overabundance of supply in one area, the job is for that supply to get cheap enough that it can be moved to areas where there isn't as much. And so you saw Brazilian basis values fall to near historical lows. The likelihood is we'll see the same thing happen in corn. And so what it is it's just very cheap supplies working their way into the global market that, basically the US has to compete with. And so we've seen this sort of continuation of growth out of Brazil, with this year being somewhat of a culmination. The high prices have incentivized significant increases in acres planted and the good weather, reasonably decent weather across much of the country this past year. Obviously, Argentina struggled, but decent weather has kind of helped support that production. And so now we have to chew through those supplies.
Thank you. And then Garrett, your kind of final thoughts or anything that we haven't discussed, and what should we be looking at?
I think the Brazil market, as far as the profitability of a farmer, is maybe the canary in the coal mine, where they expanded production based off of high commodity prices. They've experienced a relatively tight credit crunch, and they have no storage. So I think the profitability of the Brazilian farmer is probably the worst it's been in 20 years. And it's probably going to get worse next year. On one of Angie's point about the consumer, I think what we have to realize in agriculture is that, we can explain to the consumer what we do, but we also have to listen about what the consumer wants. And does the consumer want EV? Does the consumer want cage-free meat production? It sure seems like it. So, you get into we have to adapt and change practices. You mentioned organic use, or organic or non-GMO. There's a sector of the demand spectrum that wants that, and that's a niche to fill for some producers. As we look at the big term profitability of your ag operation, there's going to be growing pains, and there may be an option for you to look at non-GMO or organic growth. Certainly that market seems to be growing. So longer term, I think that I think that this is not something that's going to go away. There's going to be something that comes down the pipe, longer term, and whether it's climate related or whatnot, is just something you're going to have to deal with. But this consumer is wanting this, and that is what's driving it. So you either need to learn to adapt, or it eventually fade away, unfortunately. But I think the bigger picture in agriculture is I think 2023 really is a transition year. We had the market get spooked because of the Ukraine war last year. We've had the come back to the sensibility in 2023, along with a rising interest rate environment as the government tries to control inflation, combined with the impacts on profitability crunches globally. And I'm not sure we're going to have cheap wheat next year. We have there might be some dryness issues in Russia, and that may impact how cheap the Russian wheat gets. And we might have South American supplies, issues if they reduce acres on profitability issues. But I think 2024 might be a little bit, like I said, 2024 might be a little better year. If you look at these new crop supply and demand forecasts, Chinese demand recovers in 2023, especially in corn, largely because they don't have cheap wheat to alter. And maybe in the last month, this turned wet in the Chinese wheat crop, which was supposed to potentially create excess cheap wheat for them. If they have wheat quality concerns, that could also create some situations in the wheat market next year. So right now, like Angie said, a rising interest rate environment, the investment, the spec money interest in commodities has waned versus last year. But I think that we potentially see the harvest low here in October, November, and then 2023 could get a little bit more, or excuse me, 2024 could be a little bit more interesting.
Excellent. Well, thank you everybody for taking time out of your day. That was hugely insightful, especially for us that are not quite as knowledgeable in the area of agriculture. So I want to thank all our guests, obviously, for coming on stage today. Follow all these people. They have great commentary and great information that they put out on Twitter. And obviously follow Place Your Trades if you want to find out what other events that we have coming up. And thank you for all of the listeners. And we will see you next Wednesday. Thanks, everyone.
Yep, thank you.
Thank you, Tracy. Thanks, guys.